Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, April the 5th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on. We do have some economic data today across the pond. It's a little bit light. It looks like there's a lot of economic data across the pond because we got a lot of PMI numbers, which is the Purchasing Managers Index. It's not the ones that they widely look at. They look at their flash PMI. Here in the United States, we look at the Institute for Supply Management, which we just recently got. So I'm going to skip over the ones that are already kind of redone. It's just a review of some of the ones that we've already gotten out. But we did get out of Great Britain the Services PMI, which is Purchasing Managers Index. For them, anything above 50 expansion came in at 51.7, expected to be 53.9 though, slightly lower than expected. So, you know, it's still above 50, that's still expansion. We're still at pretty good levels, so that's actually pretty decent. Then we got factory orders out of Germany, came in at 0.3%, expected to be 1.6%, so much lower than expected there. And remember, last month's number was a negative 3.9. They actually revised that up slightly to negative 3.5, so still not a great number. All in all, even with the revision, it's still not looking too good. And then we also got, here in the United States, we got unemployment claims coming in at 242,000, expected to be 225,000. So higher is not good when people are looking for jobs and can't find them. And then we also got natural gas storages coming in at a drawdown of 29 billion cubic feet, expected to be a drawdown of 29 billion cubic feet. We also have Bostic speaking later on this afternoon at 1 o'clock Eastern. So keep your eyes out for that. They can talk about Fed policy. It'll be interesting to see if he kind of follows along with what we saw earlier on in the week about some of the Fed governors saying they might hold off on interest rate increases. All right. So on to the overall markets. We've got crude oil moving slightly higher today. Really battled back yesterday in the day. Remember, we were seeing the equities start to move higher. We were seeing crude oil lose a little bit of steam there. Really rallied hard to get above the 50-day moving average and settled nicely almost at the highs of or near the close, almost unchanged after being down quite a bit earlier on in the session. So big comeback for crude oil, starting to move higher again today. Gold coming off, you know, that flight to safety trade after yesterday's massive rally, which we'll talk about, you know, with the Dow being down 600 or something going into the day, that's pre-market, and then rallying to be almost up 200 on the day. That was a massive turnaround in the equities yesterday. Pretty good sight to see, I guess, for if you're a bull. But that being said, when you see that fear come out of the market, then you're going to also see gold have a little bit of struggles, even though the dollar is still gaining strength, or it was rallying in spite of the dollar gaining strength, and now it's starting to catch up with the equities moving higher, the fear coming out of it, dollar moving higher. All those things should cause gold to come off. And seeing similar situation in Bitcoin. Remember yesterday I talked about this. That would have been a confirmation move, but you needed to get out, and it's not looking too good. This is just a downward spiral trend to get to 58.80 is what I've been targeting it as. It does have a couple of support areas here, like with this value area high. That's going to act as support, but I still think it's going to want to go down there and test that. At least, you know, get a retest there. VIX coming off. Again, because we're talking about the equities being higher with the Dow Jones up over 300 points, moving back to where the time value node is. And this is where the most time spent. This is where the most volume's been spent. That's where, you know, money is coming into there. And this is kind of where we're settling down. It's still a value area, though, but moving moving back higher after yesterday's massive rally. That was just a massive turnaround. Then same thing with the NASDAQ. You can see that massive move we saw yesterday. That was a red candle. Now it's a total green candle and was up on the day yesterday by about as much as it was down on the day when we first started talking. But today we are looking at it up about 45, 46 points. The overall market's getting a breath of movement to the upside. We didn't see, one thing to note is we didn't see a ton of volume in that massive rally yesterday. It was a nice, smooth, unobstructed to the upside, almost unabated to the upside, but just not a lot of volume in that marching that we saw. Now today we got this 38 Fibonacci level, which is for the extensions, lining up with the 61 there. That's why I left both of those in there. That has acted as support and resistance. Today we're kind of peeling through that. It's finding a little bit of resistance as we try and claw through it, but would be a big win for the bulls if we settle above that line, because that is a pretty solid area of resistance right now and will act as support as we get above that. So the bulls definitely want to get above that to kind of hold on to that support. Now, this is that trade that I was talking about yesterday when we were opening up. We were starting to watch the rally come, and then at the end of the day, it was just a blast off to the upside. It just almost doubled the pace to the upside, just unabated. And then overnight inventory kind of consolidating, and coming into the day, another blast off to the upside, almost unabated as well. We're just continuing to move higher as I think more money is coming into the market after that little bit of correction there. All right, on to a couple of other things. So I wanted to talk about a few of my trades. BABA, if you remember, I have on a straddle in there and collected a nice chunk of change. So I have about $12 to $14 movement at expiration or by expiration. That moved to the downside. Remember, I was talking about I'm going to have to start really thinking that I'm going to get aggressive with these trades and become more mechanical, kind of adjust those positions to increase my probabilities of success. But with that late day rally, I just held off on doing anything and just left everything as it is. So that straddle left on the same there. And in IBM, I have on a strangle in there, and it's the 145, 170 strangle. So you can see when it was getting down here to the 148 area, if it got much below this, we're getting close to that 145, which is where my break even is. That's where I would have started getting mechanical, but we got that massive rally, IBM blasting off to the upside, right back to the point of control, which is where I thought that this was originally going to kind of start to settle down. Now, I'm not going to be able to take a whole lot of profit. I made the mistake of thinking that this earnings came after the cycle that we're in, so I'm going to be willing to take a little bit less than 50% of my max profit on this, or even 30%. I might just look to get out of it now that it's back into profitability. It was a big loser for a while there yesterday, and that big turnaround turned that into a winner. And close to a scratch. I'm up some good money on it, actually, but it's not right there at 50%, but I don't think I'm going to get there and get that volatility to come out by the time we have that earnings. I think that ball's going to hold up those premiums, so I might just pull the ripcord on it. I don't want to ride it till after the earnings announcement. Anyway, and then trade that I added in both my IRA and in my margin account. Let's talk about the margin account. I actually added this today. With my IRA, I got it right at the end of the day yesterday, but you can see it popped higher today, and so I had to do different strikes on this. So in my margin account, I went in into the April, sold the 52 puts in there for 37 cents. Now, if we go over and look at my IRA, I got much better pricing, obviously, and I went in and sold the April and sold the 51 puts. So I have $1 more to the downside, and then bought the 45 puts to define that risk, and I collected 31 cents. So you can see volatility has started to come out of this. Directional move for my IRA is the direction we want. All of those things being equal, the IRA obviously is doing a little bit better than my margin account because I got better price location, better pricing, and today now the directional move for my IRA, which is not really being reflected in my margin account. All right, that's about it. It's a pretty quick one today. Tomorrow's webinar is going to be on the iron condor, and the iron condor is a great one. It's kind of like what we were talking about with this strangle, and this strangle with defined risk, where you can be very mechanical with this. If it starts going sideways, we want it to trade sideways in a trading range, but if this trade starts going bad, what I meant by sideways, meaning one of our short strikes are being tested, then that's when we want to start getting a little bit more aggressive and mechanical, collect more credit to increase our probabilities of success. And I'll be talking about how to do that in the webinar tomorrow as well. Throw that little tidbit in there because, yes, you can go find out how to do an iron condor online, and they are not going to tell you the proper strike locations and how to be mechanical with this trade. You know, some people are just going to be like, you just go with it. I stay mechanical, and I'll show you how to do that. And finally, give me a like or dislike at the bottom of this. Either one works. If you give me a dislike, though, give me a comment. Tell me what it is you didn't like about it, because if I don't know, then I can't fix it, right? So help me out here and give us some feedback, all right? So if you can't take that, take it easy.